Hello, everybody. I want to welcome you to our webinar about the Economic Injury Disaster Loan Program. My name is Mark Langford. I am a small business advisor with the Miami Valley SBDC, the Small Business Development Center in Dayton, Ohio. We're going to go through a PowerPoint slide deck which will go over the basics of the program. This is a recorded webinar, so the chat boxes will not be enabled. There will be some email contact information at the end that you can use to ask your questions to us if you have them after the presentation. So just want to welcome everybody, and please do mute your microphones. This is not an interactive presentation. It's basically a recorded one so that you could go back and refer to it as needed. So like I said, it will not be interactive. We won't be answering questions on the fly, but hopefully we will answer most of your questions during the course of the presentation. If not, you will have our contact information that you can contact us later with those questions. So we'll go ahead and get the slide presentation going. Like I said, this is about the SBA Economic Injury Disaster Loan Program, and this is just an overview. So today what we're going to talk about are the loan programs themselves, what makes you as a business owner eligible, what are the details of the program, what you will need to apply for the loan, and then we have some other thoughts and suggestions that will help you along the way. So the SBA Disaster Loan Program provides working capital for loans for business injury related to the virus. So these loans are intended to keep businesses in business. They are not for startups, and they are not for businesses to use for expansion later on. So it's basically a life preserver being thrown out to businesses that were forced to shut down because of the virus. The proceeds from these capital loans can be used to pay your fixed debt, your payroll, your accounts payable, and other bills that you would have paid had you not been shut down for the coronavirus. As far as eligibility goes, small business or nonprofits located in a declared county. I think at this point, all counties in Ohio have been declared a disaster area because of the coronavirus. As if we get into the definition of what a small business is, we can send you a link if you're not sure if you're concerned as a small business or not, that you can use at the SBA test on it. Most all of you, if you're interested in this, will be small businesses. Obviously, major chain stores are not eligible, but you know, the employee number of employees is generally considered less than 150, but you know, in revenue could be as high as like $1 million to $1.5 million and still be a small business. So if you have any questions, contact us and we will send you a link to what the test is for the SBA definition of a small business. You have to have capital needs related to the coronavirus itself. So if the virus is not affecting your business, you won't be eligible for the loan. It is a loan. It is not a grant program. So you must have a credit history, which is acceptable to the SBA. What that is, we can't say. We've asked, you know, what is the baseline credit score of the owner that is necessary, and they will only tell us that's proprietary information, so it could be a flexible type score, and it may depend on the number of inquiries or applications that they get. Your business must show the ability to repay the loan, which means you must be making money. You must show that you have been paying back your debts, whether it be loans or other liabilities. If you lost money in the preceding year, that could be a problem, or if you were in trouble before the coronavirus hit, that could be a problem. You can't have any prior default to the government. You can't be debarred. You can't owe federal income tax or have any problems with the IRS and still get the loan. These are only for uninsured losses. If you have business insurance that covers disaster-related business interruption, they do expect you to file for that and make a claim under that first. It is called the EIDL program. EIDL assistance is only available to applicants and their owners who cannot provide for their own recovery from non-government sources. So basically, this is your court of last resort. If you have access to a line of credit, personal credit, or funds that will get you through this, then they're going to expect you to exhaust all your possibilities in those areas before you apply for this loan. Some more details about the loan itself. The loans can be for up to $2 million. It's based on what your numbers were before the virus hit. The interest rates are pretty good. It's 3.75% fixed for up to 30 years in the term, 2.75 for nonprofits. And it includes what was a 4-month and as just recently as of yesterday, I believe, turned into a 11-month deferment of payment beginning on the date of the note. So the note takes place when you sign for it and agreed to it, and then you will now have not 4 but 11 months of deferred payments before you have to start paying on it. Collateral is not required for up to $25,000. That's what they call a signature loan. They will lend you up to $25,000 without collateral. Collateral would be business property in the business name. Remember, as you apply for this loan, you are not applying individually, you are applying as a company. Now, the SBA will check your individual credit, but the applicant itself, as you apply, you will be applying as a business, and they will check your business credit and your personal credit for that matter. On collateral is usually something like real estate, property and such, equipment. They are willing to take a second or third recourse position on that collateral. So if you have an outstanding loan with a bank already, whether it be SBA or conventional, and they have a lien on that property, the SBA will put a lien on the property, but is willing to stand second or third in line for recourse on that as collateral. And of course, there's a link there to where you would go to apply for the loan. All right, there's some information that you'll need to know and need to have for the application. Most people will be filing Form 5, the electronic loan application, and I do highly recommend that you use the online application as opposed to mail application. The online is faster, and I'm just afraid that most of the people that apply through the regular mail may get lost in the shuffle. So there's 2 forms. There's a Form 5 and a Form 5C. The thing to remember there is Form 5C is for sole proprietorships only. So everybody else, nonprofits, LLCs, general partnerships, all the corporations, all of these will file Form 5. And by the way, if you're a sole member LLC, file Form 5. Even though you're a disregarded entity and for federal tax purposes, you're considered a sole proprietor for tax purposes. For this reason, this is based on business organization. So even as a sole member LLC, you are still an LLC. So you will have to fill out tax authorization form 4506T for all 20% or more owners, 50% on an affiliate. And what that means is that's just giving the SBA permission to examine your most recent income tax. So it's pretty easy form to fill out. It's basically just granting them access to your most recent and permission to view your most recent tax form. And that's for 20% or more owners. Okay, they're going to want your most recent business tax return. Each owner who meets that test of 20% or more will have to file a personal financial statement, and then also a schedule of liabilities, which is Form 2202, which is going to tell them what bills that you have to pay. There's some other information that may be requested. You may not have to include it in the initial application, but they may come after you later for this information or ask this information later. And one thing you want to make sure is that you have all the schedules with your income tax. Most people to the Schedule C on the regular 1040, that's fine. But if you have other specific schedules, you don't want to leave anything out. Missing information is one of the biggest problems in these types of loans. And do remember that you are borrowing directly from the government, the SBA. This is kind of a strange situation. You're not borrowing from an SBA-backed banker or lender. You are borrowing from the SBA itself. So they're going to want to see the most recent federal income tax return for the principals, the owners, 20% or more, general partners, managing members, and affiliates. And you'll see the filing requirements when you go into that website. That'll tell you more information on that. And if you have not filed your federal income tax for 2019 yet, maybe you got an extension or something, you definitely want to include a year-end profit and loss statement and a balance sheet for the most recent year. And if you can, and especially if it shows good news for January, February, and whatever part of March before the virus shutdown happened, the current year-to-date profit and loss statement will help. So additional filing requirements, SBA Form 1368, providing monthly sales figures. This is going to help them determine the damage or confirm the damage, economic damage to your business, and make the loan a reasonable amount. And this is, like it says, especially important for economic injury disaster loans, because in that case, the damages are very subjective as opposed to physical damage, which is objective. And remember, this is an economic damage program, so you should not fill out this application claiming physical damage due to the coronavirus. So some more information, you want to keep rechecking the filing requirements to ensure that all the information that you need is submitted. They've told us the biggest reason for delays in processing is due to missing information. So you want to make sure that you include everything. I had an example the other day where a company, an LLC, had an owner who owned less than 20% of the company. So they omitted that person from the list of owners. Well, I would not do that. I would include all owners, even if they own less than 20%. Just remember that the less than 20% owner will not be required to personally guarantee the loan repayment. So if more funds are needed, and that can happen because we don't know how long this is going to go on, the applicants can submit more documents and request an increase in the amount. Also, if you need less than what you were originally approved for, you can ask for a reduction in the loan. And if you are granted the loan, you do not have to accept it. You can turn it down. If the loan is denied, which happens from time to time, the applicant is given up to 6 months in which to provide new information and submit a written request for reconsideration. So the initial no is not a final no. As a matter of fact, I had an instance last year. We had a tornado damage client who filed for relief under this type of program. They were initially turned down because their economic performance was not up to par for the previous year, but they had interims for the current year that showed a turnaround, and the SBA actually did reconsider the loan application and granted it. So here's some additional thoughts. Don't let uncertainty, you may not know about if this loan is right for you, don't let that keep you from doing it, because there's going to be an onslaught of applications. You don't want to get lost in a tsunami of applications. So if you feel like this is applicable to you, please go ahead and make the application. Like I said before, you can always turn the loan down if you have second thoughts and decide this program's not for you. So what you want to do, you want to assess your situation. What are your fixed expenses, rent, utilities, payroll is a big one. What are the things that you need to pay to keep things going? And then the other thing is, how short are you going to be, and how long can you stay afloat with the savings and the money that you have? So you want to keep on top of those numbers and make basically a plan for survival on this. So hopefully You can get together with your accountant and your numbers people and come up with a plan to see just how long you can last. Do you have any revenue streams with potential for growth? Obviously, you see that a lot with the restaurants with their drive-through service that is allowing people to come and get food without coming into the restaurant. Of course, that's on a day-to-day thing with the lockdown orders. So look at ways that you can make money. Maybe you can make money online. So do you have any revenue streams that you can leverage during this shutdown? How can you reduce expenses? Payroll obviously is a big expense. Nobody wants to have their employees go without income, but you may face a situation where you have to lay employees off. And if you do, to keep your business afloat, that's what you have to do. And hopefully the state unemployment office will take this into consideration and not punish everybody with an experience rate after this is all over, because when the governor tells you your business has to shut down, it's very hard to keep those employees on the payroll. If you owe money to a lender, talk to them. Most all lenders are working with borrowers right now. I mean, this crisis is affecting everybody, so be proactive, call your lender, talk to them and see if you can get either a deferment, a skipped payment, interest-only payment, whatever you can negotiate. Loan modification may be an option. Maybe they can extend the loan, allow you to skip payments and so forth. So you want to actually be proactive, talk to your lender, see if you can get something worked out on that. And then also negotiate with your landlords. Very few landlords, be it business or residential, are expelling people or throwing them out for unpaid rent during this crisis. Most landlords know what's going on. They're affected themselves. Deferring your rent is probably going to be an option for you, because it doesn't do a landlord any good if they throw you out for not paying your rent, whether you're a business or a residential person, and they can't replace you because everybody is sequestered to their own house or residential place. So those are your two of your biggest options. Well, three are your biggest expense options: your payroll, your outstanding business loans, and your rent. All three of those should be workable in your plan to survive. So here's some points to keep in mind, some things that we've covered that I want you to keep in mind as you think about applying for this loan. The deferment of the first loan payment has just been increased from 4 months from the signing to 11 months. I think that's a huge increase and a good thing done by the SBA. And like I said, that announcement was just made here recently. Know that you are a business when you apply. Do not apply as a person. Apply as your business, even if you're a sole proprietor. Most all businesses will file Form 5. Form 5C is for sole proprietorships only. An unrelated issue, but something to keep in mind, is Ohio sales tax. Your filings will still be due the 23rd of each month. What if you don't have any sales because of the shutdown? Well, if you don't have any sales, keep filing. Just file with zeros. The main thing is to keep filing. Where you get into trouble with the Ohio State Tax Commission is when you do not file, because they assume that something bad's going on if you don't file. So file it. If you can't pay all of it, pay what you can. If you had no sales, file your Ohio sales tax return with zeros in it. And remember, the $25,000 loan is non-collateralized. It's a signature loan, and that's probably going to be a lot easier to get than the larger loans. Some other points to keep in mind on the electronic application. Section 3 has a rather large section for comments for details. It's in this section you want to summarize your economic damage. Remember, there is no physical damage applicable to this particular disaster loan program. So you don't want to say that you've had equipment or real estate damage. You can't indicate damage on that. So you're going to have to describe what your economic damage is, and using section 3, which is kind of a blank slate comment section, is a great place to list what your economic damage is and how you arrived at that figure. So please make sure that you're using section 3 on the online application. Any collateral used for the loan program must be in the company name. Remember, the company is always the applicant. So if you own the company and have equity in your home, that's not what they're looking for. They're looking for collateral in the business name. And the other thing is just make sure you're submitting the application. If you're declined or need to adjust or change your mind later, you can do that. Some other points to keep in mind: you can apply if you have other business loans, whether they be SBA or conventional, including other disaster loans. The only thing about disaster loans is you cannot consolidate them. So if you had a disaster loan that you're still paying on from the tornadoes last year, you cannot consolidate them into this new loan. However, you can get a new disaster loan for this particular disaster. We're asked all the time, we're given different situations and asked if the SBA will approve your loan application if this is the situation or that is the situation. The Small Business Development Center is funded by the SBA, but we are not employed by the SBA, and we are certainly not connected to the disaster loan program other than just to assist you in helping your application process. So we cannot tell you if your loan is going to be approved or not, especially with them changing the minimum bar for what the credit of the owners is supposed to be. So please don't ask us if we're sure that you're going to get the loan or not, because we can't tell you. The SBA will look at each situation individually, and their decisions are going to be based on a multitude of factors. Mostly, did you actually suffer true economic damage from the coronavirus shutdown, and do you have the ability, or did you and will you have the ability to repay the loan? Your best bet is always to plan on survival, assuming minimal to no assistance. And that involves coming up with a survival plan, cash flow wise. The SBDC can help you with that if you're one of our clients. So you'll probably have some additional questions. So I'm going to leave this slide up here for a second. That we are the Miami Valley Small Business Development Center. The 3 names you see here are certified business advisors here to help you. So there's 3 of us: Lakeisha, myself, Mark Langford, and Kim Woodbury, our director. Our emails are on this slide. And then also the phone number you see down below, the 937-281-0118 number. You will reach our admin person who can schedule you with one of us advisors to help you with the process, or any other plans or processes you need to get through the coronavirus issue here, the disaster that we're dealing with. So leave that up for a second, and then please follow up with this if you have any other questions. We're here to help businesses survive during this difficult time. Also have some other links here: the disaster loan application link. There's also a SBA written guidance page at the link here. And by the way, we can send you this slide deck with these links if you would like it. So you can email or call us for a copy of the slide deck. And then the other thing is the coronas and unemployment insurance, how those 2 things work together. Remember, unemployment is a state program, so that's why you see the ohio.gov in the bottom link there as far as coronavirus and how it applies to unemployment. So that's all we have today. So thank you for attending this, and then this webinar, this recorded webinar. Hopefully you can follow up with Other questions and issues with us, we're here to help you. There's no charge for SBDC advising services. We're always free and always confidential. And again, my name is Mark Langford with the Miami Valley SBDC, and hope to talk to you again soon. Thank you.